Good afternoon, everybody. Welcome to our webinar, Valuations and Their Role in Business Transformation. We'll give everyone just a few more minutes to get in, and then we can get started. All right, everybody. Thanks so much for joining us. Again, welcome to our webinar, Valuations and Their Role in Business Transformation. My name is Aaron Mall, Executive Vice President here at iTValuations, and we're grateful for the chance to spend a little bit of time with you this afternoon to talk through valuations. Joined today by my colleague, Greg Northrup. Greg, good to see you.
Good to see you, Aaron.
Also, Rich Anderson of Imagine IT. Rich, thanks so much for joining us on the webinar today.
Of course, my pleasure.
So it looks like from the attendee list, we have some new attendees and we have some groupies, folks who attend every webinar. And so we don't want to assume that you know how this all works. So let me just give you a brief overview of how things go. We have a tradition here at iTValuations of giving away Amazon gift cards if you can answer the trivia question that we ask at the start of the webinar that we reveal the answer to at the end of the webinar. And so we try to make it related to something around a presenter or a guest. And since Rich is our guest today, we thought we would make it a Rich kind of question. So if you want to win a $25 Amazon gift card, you must answer the following question in the chat and be the first to do so. And so the question is, what was the most recent sporting event attended by Rich? And bonus points if you can actually not just say the sport, but also the team name. So sport is worth maybe a point, team name is worth a second. So again, end of the webinar, if you get that correct, we will let you know, and you will get an Amazon gift card in your inbox. A couple of housekeeping items before we get started. If you're looking forward to seeing us out and about, we'll be at the Evergreen Elevate Conference in Austin, Texas, March 3rd and 4th. Reed Warren, our CEO, will be there. We're setting meetings right now for Reed. He's a popular guy. So I would for sure say, let us know if you want to connect, and we will connect you with Reed while in Austin. For those of you in the Evolve peer groups, the next quarterly is in Chicago, May 5th through 9th. In the middle of that week is IT Nation Grow. Rich, I think you went to an IT Nation Grow. Was it this last quarter or the quarter before?
It was the last quarter, yeah.
Yeah. So it's a great event. I would say probably a good introductory level opportunity to learn about M&A within the IT and MSP space. But that is on that Wednesday between the two quarterlies. And so if you're going to be at those events in Chicago, let us know. We'd be happy to grab a coffee and connect while you're there. A couple other pieces of information for you. We have another webinar next week called MSPs and CPAs, how your CPA can drive value for your company. Greg will be back on with Randy Crockett from Snap Tech IT. He's the CFO. They work with IT tax advisors, and it's been a good partnership, and Randy wanted to share more about what they've learned through that engagement, and so happy to talk through that. And then in March, save the date, March 20th, we have a webinar entitled Valuation Trends of IT Companies for quarter one. We do several valuations, over the course of each quarter. And so with all that valuation data comes some findings and some opportunities for us to share what we're seeing across the industry. And so we'll be doing those every quarter in the third month of the quarter. And so we'd love to have you sign up for that webinar. You can go to all of our webinars registration pages at itvaluations.com/webinars. So I think I've got the webinars and the housekeeping pieces out of the way. For those of you who may not know what we do a variety of things, but ultimately we're about business transformation. We just happen to do valuations, buy side, sell side, some tax, CPA advising, mergers. And then in the fall of this year, we'll be launching the Value Creation Academy. More to come on that, but ultimately we're about helping businesses transform. And these are the services that we offer and how we do that. All right, let's dive in. Greg, maybe you can start with maybe a brief introduction of yourself and your history, what brought you to iTValuations, and we could ask the same question to Rich to provide a brief bio as well.
Yeah, absolutely. Thanks, Aaron. And yeah, I joined iTValuations September of 2023. Worked at a public accounting firm for the first nearly decade of my career, working with high net worth individuals, their small businesses, tried to transfer businesses from one generation to the next, as well as worked with private equity groups that bought a lot of those family-owned businesses as well. And then kind of took that skill set to here to ITV to get out of public accounting. Thinking I'd never touch a tax return again. I'd only do valuations and M&A, and did all the valuations here at ITV since I joined, helped launch the VAST program that we'll be talking about today. But then about 8 months into my journey here, started the CPA firm IT Tax Advisors with Reed. And so it's been quite a journey, and just really enjoying working with this community of great people here in the IT service community.
Thanks, Greg. Rich, introduce yourself. This is the first time you've been on one of our webinars. Let the audience know who you are.
Yeah, so Rich Anderson, I'm the CEO of Imagine IT. We have 5 locations in 3 states, so Minnesota, Kansas, and Michigan. But I started back in 2000, a little boutique consulting company that I later bought stupidly, lost a lot of money trying to prove that it was a really good decision, and it really wasn't. In 2012, did another merger, or actually got acquired by a competitor. Had another purchase transaction. I did a sales transaction. We recently did a merger. We now are at 60 people, and yeah, loving it and working with IT Valuations and having a great time. I was also, for the Evolve friends on here, I was in Evolve for 14 years, facilitated a group and was a diligent attendee for many years in a row. So now my leadership team attends, but shout out to any Evolve attendees.
Great, thanks, Rich. Well, Rich, I'm curious, what prompted you and the folks at Imagine IT to get an initial evaluation done of your business?
Yeah, the question's always like, when do you do it, and then when do you do it again, right? So the very first one was back in 2012 when my company was really struggling, and I was facing a number of decisions, several of which were not very good. But the one that ended up working out was selling my company, or we called it a merger, but you know how it goes, right? There's usually a buyer and a seller, and my company was the seller, so we merged in with another company and needed to figure out like what was a fair compromise for the 2 different companies when they joined together. So there was, at the time, I had one other owner, and the company I was merging with had 2 owners. When the deal was done, there was only going to be 3 of us left. So the one guy was going to leave, and the other 3 were all going to be equal owners. But the question is, equal part of what? And we had to figure out the what. So that was the very first time we did a valuation, and that was, I guess, 12, 13 years ago.
Yeah, Greg, it's not uncommon for us to, in some merger conversations, to begin that with a valuation of some sort. Talk about how the valuations work in a merger situation.
Yeah, I mean, we try to do cashless, debt-free mergers with our clients. So effectively what that ends up looking like is both parties, or however many parties there are that are coming together, are essentially contributing the fair market value of their businesses, which is essentially their customer list, their equipment, their people. And you have to get a valuation done to really assess what is the fair market value of that asset that you're bringing to the table, because it is cashless. You're not necessarily, you could put cash into it, but because of that divine cashless nature, we do evaluation of each company separately and see, okay, what is the value of their standalone entity as if they were going to continue on by themselves. And then in order to kind of paint the value proposition of coming together, we actually do a combined merged valuation of the merged entity, and then also try to take into consideration some of those consolidations, cross-sell, upsell opportunities. What is that like combined entity really going to look like and operate and function as in perpetuity? And really try to see what is that valuation lift that each of the owners get by coming together. And generally speaking, we typically see about a 25 to 75% value lift in overall valuation for each of the individual parties when they come together, just simply because of the EBITDA arbitrage that happens when you go from a lower EBITDA multiple to a higher EBITDA multiple based on just size alone.
Yeah, that's true. So Rich, kind of going back to your earlier valuation, that was for the purpose of a merger, but now you're at Imagine IT. Talk about the decision to get one done recently, and then also why ongoing? Because you said like, when do I get one, and then how often, when do I get one done again? Talk about that a little bit.
Yeah, so in 2021, remember we're coming out of COVID, we're heading into the Great Resignation, but I was involved, had another really compatible member in my Evolve group that I had actually been doing some EOS work with them, helping them implement and doing their quarterly meetings, and we finally just looked across the table at one another and said, we might be better together. There's that awkward chuckle, right? You're like, yeah, right. Yeah. And so, as we're kicking it around and kind of just trying to decide if that was a silly idea or a reasonable idea, Reed had presented to our group. And so we called him up and said, what does this look like if we actually did this? And, Greg, to your point, we kind of ran the numbers, and A plus B was not, or 1 plus 1 was not 2. It ended up being, 2.25 or whatever the math was. And we thought, well, this is kind of fun. So we did get a evaluation done there at the end of 21, and we merged in 22. And then to answer your second question, then one of the partners of that transaction became a silent partner very shortly thereafter, and we knew that. And since then, we've had another partner become silent. So there was four of us, and now
Mhm.
there's only two. But the other two who are silent, they still want to know what's going on, right? And you can either give them the detailed stuff, or you can give them the more visionary, bigger, long-term stuff. And I think we struggle with that second one. We're so used to living in the moment and looking at the monthly financials. I mean, for those in any kind of a peer group, you probably have quarterly financials, but that's still not very big picture, right? I mean, you're still looking at a quarter. And the board was looking at us asking, great, but what does the year look like? What does next year look like? What does our future look like? And at what point do we have a liquidation event? And what will that look like when we get to there? And so we had to start answering that question. And to be honest, when we started, it wasn't very good. It was an Excel file, and we said, here's what we're forecasting. And they said, well, why would we believe that? Right. So we once again called Reed and got introduced to Greg, and we did another valuation, kind of a one-off valuation, I think a year after that merger. And Greg at that point said, we got this new thing, this valuation as a service thing. And he told us about it. And we're like, this is perfect. And here's the full picture at the end now. We just had another meeting with our board about 3 weeks ago. And it was the first time we've had a board meeting. We didn't even look at monthly or quarterly financials. We were all talking big picture. Where are we going? What geographies do we want to operate in? Do we want to change our lines of business? What's our retention policy? Like all of the big stuff that you want to be. But we couldn't have gotten there if they didn't have faith that we were, calibrated and monitoring the right thing. So that's what we've been doing, and it's worked incredibly well for us.
It sounds to me in a way, I mean, the 24 drivers of value, the 16 financially, 8 marketability pieces, those are a part of what you look at quarterly with valuations as a service. So those are very detailed, very specific things, right? And by, in essence, showing the board and other leaders that you're taking care of those things, then you can elevate the conversation, really talk about value and value creation. Were there specific levers that were highlighted by the tool that surprised you quarter over quarter? You're like, well, I did not know that would drive that much value.
I think it was more of an appreciation that you kind of know it is value, but most calculators wouldn't take it into account. And when you start seeing things being taken into account, it gives you this trust. And so when we walked the board through the tool and we showed them some of our soft underbelly, here you can see that we're not scoring real well here, and here's what we're doing about it. They really started to trust the tool and the process of doing this. So now when we have a number and we say that it's gone up or down, we can explain why. I mean, sometimes it's an external factor. Greg's kind of had to educate us a little bit about some of the interest rates and how that impacts it. Even if we're doing great, it might not impact our valuation. But here's an example. So owner dependency. We talk about it in Evolve. I've talked about other people, and we kind of know that many of us IT folks are working our tails off. But if you take that primary person out, the company would really struggle. Well, we've been diligently trying to identify and systematize the processes by which the principals are assuming. Well, that way, if you take the principal out and replace him with another very capable executive, the company goes on. And so our owner dependency score has gone up over the last couple of years, and very deliberately so. Something like having an advisor, we know that it's valuable. We all appreciate when you have an advisor or a coach or you're part of the EOS or whatever, methodology you have, but you don't typically see that included in the calculation. So it's really opened our eyes, helped us feel good about the things that we are doing, but give you some open and honest transparency about the things that maybe you're not doing so well.
Greg, outside of Rich's experience and the realizations that he and the leadership team have seen over at Imagine IT. What other things are you seeing hitting business owners as they try to think through how to grow their value?
Yeah, I think what the realization people are having when I have my delivery calls, I'm delivering the valuation, showing them the tool, walking them through all the risk factors is, the valuation is more than just an EBITDA multiple. It's more than just, hey, grow revenue, grow EBITDA, and that in turn grows value. I was on a call a week and a half ago or so. I was telling these guys about it that, the person's value, they're, 5 million top line, 2 million in EBITDA. And you would think, oh, that's like an 8x multiple, because 2 million EBITDA, and that's what the market would pay for $2 million. But there's actually hindrances on a revenue multiple side of things that generally we don't see buyers pay more than 2 to 2.5x on revenue. So you can't actually get a full 8x because you're actually too optimized, too profitable, and you need to actually grow your revenue more. And what we found was their existing customer growth score was really low. They were growing a lot through new labels, but they weren't taking advantage of the opportunities right in their own backyard, which was their own customer list. And so all of a sudden, when we pointed that out, it was like, wow, that's a game changer. Or I had another client where they had a negative net working capital number, and net working capital fluctuates by the month, by the quarter, but it was negative because their AR, accounts receivable turnover ratio, it was taking them over 30 days to collect on their invoices. And it was because they weren't invoicing until the middle of the month in which they were performing the service, and they didn't have ACH or, payment terms on it. They had net 30 instead of net 15. So there were simple changes that we were able to talk through around the timing of invoicing and just the, details in the invoice where we were able to move that payment date from over 30 days to down to about 15 days within a couple of quarters. And that's just a simple thing that just gets more cash in the door. Then your net working capital equation looks a lot better for when you cash out of the business, as well as you just have more cash flow in general to grow and reinvest into the business if you want to do acquisitions or reinvestment of people or what have you. So those are
Yeah.
just a couple, and we're not even getting into the other 20 that Rich and I didn't mention out of the 24.
Right. No, that's really good. There are, listen, running a business is difficult. It's hard. There's a lot of things that you're managing as an owner. And so, yeah, I mean, that's probably an example of something that would never probably have been talked about if it wouldn't have been for the tool kind of exposing, hey, this is an opportunity to grow your value. This isn't just about being more efficient. This actually drives a higher value for your company. For those of you who may have jumped on a little bit late and you wonder why there's a couple of people who put random sporting events and teams in the chat, just know the trivia question for today's webinar is the last sporting event that Rich attended, and we're going to give you the answer here at the end. If you know the team he watched at that sporting event, then there's bonus points that are available. So that's what that's for. So if you've not guessed yet, drop a guess in the chat feature right now. Also, if you have a question, feel free to put that in the chat too. And if we have time, we'll get to it. Rich, Greg alluded to this a little bit already, but one common belief among IT owners is that it's all about EBITDA, it's all about revenue. Talk about how you've elevated the conversation with the leadership team at Imagine IT and how the tools helped you do that.
Yeah, and he stole a little bit of my thunder because I was kind of preparing for that a little, and he said one thing that I really want to harp on. But before I do that, I think we all can appreciate that if you tell your team that you want to make more total revenue, they just see that as more work, right? We're going to have more clients, which means more work. And if you say that our goal is to increase EBITDA from, say, 10% to 15% or whatever, they're going to go, oh, well, that's more money in your pocket, right? So you're not going to get them to rally behind those things. You have to break it down into a way that they can relate to and say, okay, well, we're trying to make the company more viable. We're going to become more competitive. We're going to become aligned with best practices. And how you can help, and Greg mentioned this, is on the customer side. It's not just about total revenue from a customer. It's about your retention of those customers. It's about upselling those customers and growing that book of business. It's about the concentration. Do you have really, really big ones, or do you have a number of mid-sized ones? And so we've kind of found the metrics that they can relate to, and then have a conversation and put it on their scorecard and talk about it regularly so that as their metrics are improving, they feel like they're contributing to the greater good in a way they can control. So that's actually helped a great deal.
Actually, I had a question. I gave two vast demos today, and I had two questions. And I think they were good questions. The first question was, who views the quarterly meetings? Like, is this just CEO and CFO. So I guess I can't have you answer for everybody, Rich, but maybe I'd imagine IT, who gets access to that dashboard? And Greg, what are you seeing as you share these results with customers?
Yeah, so from my point of view, it's definitely my senior leadership team. I mean, it's our head of revenue operations, finance, myself. We do avail it to our board. If I'm being honest, they probably don't look at it very much, but the fact that it's transparent and available to them goes a long way. They might only look at it, every couple quarters. We're just now starting to develop a more mature senior leadership team. So they're not on our executive leadership, but they're the ones who really can help us run the day to day so it doesn't always get escalated to the top. And they will soon get access to it as well, but probably in a read-only presentation format. We won't give them access to the tool, but they'll still have access to the data in the tool. Greg, what are you seeing?
Yeah, I mean, typically it's, it depends on the size of the company. On the smaller side, it is a lot of one-man band operations. So it is just the owner-led individual that's seeing it. But on the larger end, for some of our larger customers, it's like you're getting CEO, CFO, like the whole leadership team, executive team. Potentially there's a parent company that's an investor in the equation. We've had that where then the parent company and then the leadership team of the actual operations are both on the call together. So it's really all the key decision makers in the organization, specifically anyone who has equity, but even beyond people that have equity, people that are key players into growing the value of the business, they truly make or break the ability to actually go out and achieve whatever those goals and aspirations are from a valuation target per number for the company.
Yeah.
Another question I got literally right before I jumped on this one was, I think the gentleman said, I'm not probably going to sell in the next year or two. I mean, I might be farther than that. I might be farther than that out from transacting. So who's the ideal person you should sign up for this service? And I know Greg's already smiling, so Greg, I'll let you take a stab, but then Rich, I'd like to hear from your perspective too.
Yeah, no, for sure. I laugh. I was smiling because I laugh at when I look at our pool of companies that are on the platform right now. We're probably somewhere around a 50-50 mix between companies that would classify themselves as buyers and are using the tool to actually see the valuation transformation and growth as they go out and do acquisitions, as well as then we have the other half that are more sellers that are trying to drive their value up to eventually sell. And both are accomplishing their goals because buyers want to improve their optimization and their efficiency by looking at those risk factors so that when they acquire a company, that acquired company looks a lot like them in their optimized state, 6 months to a year later. And then the seller wants to be fully optimized by the time they sell so they can get maximum dollars. So it's actually working out to be not just a seller's only tool, which is what I think the fear was initially. And we're seeing the marketplace really respond to it, being able to see it from both sides.
Yeah, commenting on that real quick. I mean, Greg, we've had a conversation very recently whereby we're looking at a smaller opportunity, and I very quickly said, you can tell me what you're worth, and I can tell you what I think you're worth, but how about if we actually go find out what you're worth? Right. And so
Yeah.
again, from a buy side, sell side, or a merge side, I've literally done all three. You still need to know the number.
Yeah. And knowing the number is the start, right? I mean, that's where if the number's not where you want it to be as a seller or even maybe as a buyer, then it's about having that data behind you to
Yeah.
help you get to the next level. Um, Greg, talk about how, it's interesting because I know when we developed the tool, this is not just a valuation tool. We see this as being a business transformation tool. We want this tool to be something that actually helps owners transform their businesses, have life transforming transaction, and it starts with data. But how are you seeing now? It's been a year or so of the quarterly updates. How are you seeing businesses and owners um, utilize those quarterly meetings to drive true business transformation?
Well, what's interesting is one of the big arguments against quarterly valuation like type of model was that how much is my value really going to change in one quarter? And to be fair, it's not like we're seeing massive multi-million-dollar changes quarter over quarter. It is really probably a percentage somewhere in the neighborhood of 2 to 12%, that we're typically seeing from a valuation change perspective. But if you grow 5 to 10% per quarter, that compounds. So it doesn't feel like a big change one quarter to the next, but we're seeing companies that have done 5 to 10% each quarter. And now all of a sudden it's like, wow, you take a look back a year later and they're now 20% higher in value because of the compounding 5 to 10% growth each of those quarters. And on top of that, we're seeing folks use it for a different purpose rather than just focusing so much on that value number. It really is looking at all the rest of the data in there. It's looking at those risk factors. It's looking at the different metrics. It's really trying to optimize their business and actually have an advisor, as you know, that we get to meet with quarterly, or that they get to meet with quarterly, to actually walk them through what does that, risk factor mean. If I have that risk factor present when I go to sell, is that impacting my total consideration, or is that impacting the terms of the deal? Is that impacting whether or not a certain buyer will even want to look at me? Because ultimately, everyone wants to be in the most optimal state for every and any buyer, because the more buyers you can bring to the table, obviously that just drives the price up. But even throw out selling the company altogether, if you want to run your business in the most profitable state, you have to understand what's broken, or what's maybe to Rich's point, the underbelly of the business that isn't going as well as you maybe would want it to be, and addressing those items. And then you're going to actually be able to see an ROI on that, because now you can see the addressing of those items directly impact your valuation with a tool like this.
That's great. Rich, is there anything you want to add to what we've talked about?
Well, I mean, I haven't gotten the 5 to 20% increase in value yet, so I'm still waiting for that, Greg. But I'm guessing just because we're using the tool, that's not a guaranteed return. So, no, I mean, Arlen tells you that everybody's going to be in a seller one day or the other. So why wait until that day to find out that it isn't the number you want, or you could have done something more to get it? So even if you're not buying, selling, or merging here in the next 6 to 18 months, I think it makes a lot of sense and is a higher OML discipline to understand the variables that are impacting it. It just makes you smarter. And you can take that to your consulting side. You can talk to your clients about it. I mean, they're all going through the same journey. This isn't just an MSP thing. So
Right.
it's just leveling up, I think, your intelligence and acumen around the inevitable.
Yeah, and one thing I'll add to that is before we launched Fast, we would have a lot of repeat customers that would get a valuation every single year.
Yeah.
And the number of times they'd come back that next year and the value is almost identical.
Yeah.
And it was like we gave them advice of like, go out and do this, this, and this after that first valuation. They come back a year later and it's still the same number. And there's kind of that lack of accountability. There's that lack of, continuously looking at those drivers of value and what, simple changes that can be made in the business. And because you just get so caught up in the day to day, you could
Yeah.
find yourself working really, really hard and actually be moving in place because you're not actually impacting your value. So to actually put that number in front of you allows you to measure something and track it so you can actually work towards that goal of whatever that number is for you.
Yeah.
Good.
That's great. Thanks, guys. If you're interested in getting a demo of the service, you can scan the QR code. You can also go to our website and click request information, and we'd be happy to walk you through the 24 drivers of value and just begin a conversation around how you might discover the valuation of your company. We also, if you're interested in getting more information on IT tax advisors, this is probably the fastest growing piece of what we do. Greg, do you want to talk a little bit about what you guys are up to here at IT Tax Advisors?
Yeah, we just launched IT Tax Advisors this past summer. This is kind of our first spring tax season, if you will, that we're launching into. And really what we're trying to be is a CPA service offering for IT services companies, specifically when it comes to tax compliance, consulting, advisory type services, and really aligning your tax strategy with your business strategy. So if you have a business that you're wanting to grow through acquisitions, well, are you in the right tax structure to do that? If you want to try and grow and maybe hand off the company to your employees one day, well, then do you have the right equity compensation plans to hand it off to your employees someday? And so we really try to, be proactive with our tax thought process in the same way that you're proactive around your business and value and looking to sell and making those opportunistic, business decisions for your business. We just want to align tax with that as well, more than just file a return for you.
Yes, and to answer a question in the chat, they do file tax returns. That's part of the base offering, but there's, I think, 5 different levels of offerings, and it's all about really finding the one that really fits best for you. The webinar next week, I think it's on Tuesday, we'll dive into this topic more with Randy Crockett, and so Greg will be on that as well. So So if you haven't signed up for that, we'd invite you to think about doing that. And last but not least, the question was, which was the most recent game that Rich attended? I think that Nathan Austin wins. He said Minnesota Wild hockey game. So Rich, how you feeling about the Minnesota Wild? Maybe the question is, how do you feel about Four Nations hockey? Do you have any opinions on that?
Well, I think it's great that they get to play against each other for their home countries. But just as a little backstory, if someone had guessed the Minnesota United or the Vikings, you'd have been really, really close because I've gone to all three of those this year. But my cousin passed away a couple of years ago, and on his deathbed, I asked him, "What can I do for you after you're gone?" And he said, "It'd be great if you could take my son to a Minnesota Wild game. They live in Madison, Wisconsin, so it's not real convenient for them to get over here, but he's a big Wild fan." And this most recent game that I attended was my third game with his son.
That's
And
great.
it was a great game. We were losing 3-1, and they came back and won 6-3. So
Wow.
we got to see a great game. So congrats, Nate.
Wow.
Yes, Nathan, I'll be sure to drop you an email with some instructions on how to collect that gift card. But yeah, thanks so much, Rich, for joining us today. Greg, appreciate your time as always. And thanks to all those who joined us online. You'll get an email with the recording, and this will be posted to our website as well. Hope you guys have a great day, and we'll see you on the next webinar.
Thanks, everybody.
Thanks, everyone.